Good evening, everyone. Happy Wednesday, and thank you so much for joining us for Money Moves, a free webinar brought to you by Premier America Credit Union. My name is Francesca, and I'll be serving as the moderator for today's session. And we're so glad you're here. Hopefully, you've had some time to grab some dinner, or maybe that's what you're doing right now, and you're ready for a fun and helpful conversation about building financial confidence as teens and parents together. And before we dive in, just a few housekeeping notes. All mics are muted for the session, but we definitely want to hear from you in the chat. So please use the chat feature to drop your questions or comments at any time. We love to make these webinars an interactive conversation, even though we are virtual. And we will drop some questions in the Q&A section as well for both the parents and the teams to share their thoughts throughout. We do have some dedicated time at the end of the session to go through any questions as well. And we are recording today's session, and we will email you the recording link and any resources that we mentioned throughout the webinar so you can go back and revisit anything later. All right, I'm so excited to introduce our presenter today, Alfredo Martinez. Alfredo is our Financial Inclusion and Education Officer here at Premier America, and he brings a ton of heart and experience to the work that he does. He's an accredited financial counselor and has spent over 6 years in financial education. And with that, I will gladly turn it over to Alfredo to get us started.
Thank you so much, Francesca, for setting this up and having this wonderful conversation. And good evening. And if you're tuning in at a later time, welcome to this session. Today's conversation is really centered around building financial confidence together. Many of you can agree to this or have had some financial experiences in your lifetime where we could have always used maybe a helping hand, maybe somebody in our corner to talk about these topics. And today's conversation, as I mentioned, is centered around that confidence, but from a parent to a son or daughter child role. So for today's agenda, we have a few items I'd like to talk about. One, how money works for teens today, realistic first financial steps, building trust and financial confidence together. We're going to have some resources, some Q&A, and of course, we'll have some interactions throughout the presentation. So please, 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 we highly encourage your participation, any questions that you have, for the reason being that sometimes when we talk about financial matters and money matters, we often feel some type of way. In most communities, in some cultures, talking about money is taboo. If you ask any adults what their credit score, how much money they make, or how much debt they're in, we may cringe at that idea, right? So again, the idea is to share important stories, learn from this, and see what we can do to pass on good money behaviors to our next generations, and so they can make better financial decisions. Next slide, please. Awesome, awesome. So it is important to note that this is a team effort. Throughout the session, as I mentioned before, we'll ask you both to discuss and share your thoughts together. But I did just want to start off with some just general information here. Teens and young adults begin to earn money, make money decisions on their own, and develop their financial skills and habits. They also begin to plan for their financial future and work towards their plans. School within all school ages, right? Their development and practice of financial skills and research and decision-making strategies are important for achieving and maintaining financial well-being in adulthood. So we're going to set the stage for these conversations, and as I mentioned, we're going to have some questions. So next slide, please. And so I just want to, before we ask why now and why together, teens are already making money choices. Some of them are maybe having their first jobs, getting their first paychecks, using debit cards, online shopping, digital wallets, and have things that previous generations with new technology did not have an opportunity to use. Now we have what we call person-to-person apps, such as Zelle, Venmo, Cash App, etc., etc. We are also seeing an emergence in different types of financial institutions, fintechs alike. As an example, many young people maybe have an iPhone or some type of phone, and sometimes these institutions themselves, like Apple, is starting to come into this space by offering credit cards. And so more now than ever, youth have access to a lot more choices when it comes to making money moves. And so our purpose here at the credit union is to improve executive functioning skills such as planning and problem solving, create and encourage positive financial habits and effective money management, provide safe opportunities for youth to practice financial decision making. I say this because, as my background as a financial counselor, not every family has the same financial understandings when it comes to certain topics. And so everybody starts from a different playing field when it comes to understanding what money is and how to make appropriate financial decisions. So this conversation is, again, just for us to feel a lot better and maybe have some direction and where we want to go and how we want to have these conversations together. As we already know, many of our teens are already making these money choices. Next slide, please. Awesome. So let's continue here. Why now? Why together? Why parents matter? Teens with supportive money conversations build healthier lifelong habits. The idea here is that your involvement now, especially at a very important time of their life and age, can help develop more financial confidence. So the idea here is comes from a body, excuse me. The idea here comes from a body of research of which we call financial socialization. How is it that younger people learn about money, and how is it that then leverage this information to make financial decisions? So for the teens here, your voice, questions, and choices matter more than ever, and these are the important money conversations that we want to have, especially at a younger stage, or setting that stage for success. So the idea here is that teenagers and young adults in your family might have opportunities for hands-on learning at school and in extracurricular programs, and to help that, you must reinforce that at home. So we'll talk about some examples here in the presentation, but of course, feel free to share your thoughts or chat in the chat, as we'd love to hear from you. So next slide, please. All right, so let's start off with a little icebreaker, get some engagement here. Curious to hear, so share it in the Q&A section. When did you start earning or managing money for the first time? Feel free to throw in your responses there. We'll give it about 30 seconds or so and see what type of engagement we get here this evening. And thank you, Francesca, for throwing that question in the chat. So feel free to throw some comments in there. We'll give it a little bit of time, see what folks are saying. When did you start earning or managing money for the first time? While we get some responses, I'll share a little bit about my personal experience. So my first job, or my first time earning money, was I was about a teenager myself, and I wanted to save up for some video games at the time, but my parents didn't want to support that, so I started doing chores for other people in my neighborhood. So this looked like throwing out the trash, cleaning gutters, mowing lawns, you name it. Little little side jobs that I could do to earn some quick bucks to do so. And so that's a little bit about my story there, but let's see what you folks have to say. So let's see here. Awesome. So somebody's first time was earning money was with a lemonade stand with their brother. Wow, that's fantastic. In high school, after I think I saw a comment come in here. In high school, after job school. Yes, yes. So some of us got our jobs in high school. Okay. Yeah, please keep those comments coming. We'd love to see your engagement and just see where, folks' first experiences was, because a lot of these experiences, whether they were at home or on our own accord, has shaped our money decisions that we have here for ourselves. But this also brings up a great point for me, which I really want to talk about, is certain limitations. The parents' ability to teach their youth when it comes to money matters is very dependent on their own personal experiences, passing on great information, great strategies or tactics or knowledge. Or on the flip side, if we haven't had the best experience or if we're not well equipped, maybe we're not passing on the best ideas or the best practices. So, there's studies show that significant benefits at both the family and community levels when creating and implementing programs that focus on teaching parents on how to teach their children about money, which is part of what we're doing today, is sharing some best practices, things that we can do so we can team up and learn together. Another comment just came in, sophomore in high school, worked at a processing plant summer job. Yeah, so a lot of us got that job in summer in high school. I remember when I got my first job and got my first paycheck, and I saw the difference between a net income and a gross income, and oh boy, was that fun. But awesome, thank you so much for your engagement. Let's continue here with the conversation. Next slide, please. Awesome. So here we see that money skills every teen should practice. So we're going to break some of this down, see things that maybe you already know. Maybe we'll add to your knowledge base here. So we're going to talk about earning, spending, saving, and budgeting. These are seen as some of the major elements of what we call in personal finance, earning and spending, saving, and budgeting. And there's actually a fifth one as well, but we're not going to dive too deep into that one, which is protecting. So let's go ahead and break into these four key areas of, and we'll start with earning. Okay, fantastic. So when it comes to earning, we have to think about how we can sit at that stage. You can earn money through an allowance, or as many as of you have already commented here, through a job, by doing for yourself, or formally through an employer. So this could look like babysitting, yard work, tutoring, part-time jobs, chores and allowances we had mentioned. Going beyond the basic household expectations and tie earnings to responsibility and following through. This can help teach the youth quite a lot of different responsibilities and skill sets, the value of time, effort, and dollar. So you could help teens associate work with income and develop a sense of pride and independence. And this really kind of speaks to what I had spoken a little bit earlier about providing safe opportunities for youth to practice financial decision making, knowing in the value of a dollar and encouraging those financial habits. So the idea here with earning is that eventually the youth will start to earn money, and we will start most likely having financial tasks. So when youth and teenagers start earning, this could lead to, for example, maybe contributing to a goal that they have, things of that nature, and breaking that goal into small, manageable steps. So setting the stage could also mean modeling financial skills and decision making through what you're doing today. So this can help individuals, especially youth, allow for independent decision making through providing not a whole ton of guidance, but less guidance, and kind of taking that coach role where it's okay to maybe do things and learn through real world scenarios. All right, next slide, please. And thank you, Frankie, for adding that question in there. Feel free to comment if you'd like on that. When did you start earning or managing money for the first time? But we'll go ahead and start going into the spending here. So let's talk a little bit about spending and smart spending habits, wants versus needs, what can wait, the pause and think rule, compare before you buy. So a lot of us, especially when we come to wants and needs, have a general understanding of what this is. A lot has changed for our youth. For an example, technology, again, going back to technology, is a phone a want or a need? I've heard arguments for both. Many of us could say that it is definitely a need because we need to access our schoolwork. It's essentially a small computer, right? But when it comes to certain models out there, like again going back to Apple, they have a phone every year. So is every year do we have to upgrade that phone? And so these important conversations that you can have with your youth is very important. Just because sometimes we can fall into these consumer traps or cycles of debt or things of this nature, and kind of tackling that early on by saying, hey, let's think a little bit more long term. And so when it comes to spending, we have to allow for ourselves to develop, as an example, a spending plan, otherwise known as a budgeting. I like to use the term spending plan because it means that we're being intentional about what it is we're going to do with our money. And so think about it from that perspective. What can we do to kind of really hone in on that point with our teenagers when it comes to spending, especially in the wants and needs categories? Um, One also good rule of thumb is the pause and think, try the 24-hour rule. I also challenge the adults and the parents in the conversation this evening and afternoon. When was maybe a decision that you had made that you could have used a 24-hour rule? Something that we know as buyer's remorse. We make a decision on a purchase and maybe we think back after a certain amount of time and, oh, maybe I shouldn't have bought that, or maybe I didn't need that quite, but for some reason, some shape, some form, I ended up buying this. So the 24-hour rule is a great way to kind of hold ourselves, and a great tip that you can pass on to your youth. And if you even wanted to challenge yourself even more, you can take that 24-hour and do a 48-hour rule or 72-hour rule and mandate that, especially for items that we know it fits more in the wants categories, right? One of the things that we want to do is curb that impulse buying. We are already being primed wherever we go, whether it's a grocery store, an amusement park, we're being primed to kind of make impulse decision making, right? The sweets that we see right there at the by the checkout counter. Um, you know, the clothes that's kind of put there, the toys, et cetera, et cetera. So the idea here is that a lot of retailers, a lot of businesses are kind of hoping and to prey on that kind of impulse thought. And so this would be a great way to kind of curb that and have that discussion when it comes to spending. Why is it that, we need to think about this a little bit more, especially if you work so hard to earn that money. So again, some ideas there, and this kind of speaks back to one of the important pillars that we say here, which is create and encourage positive financial habits, improve that executive functioning skills such as planning and problem solving that spending is so closely tied to. And lastly here, compare before you buy, reviews, price and values. Yes, 100%. The idea here is simply is, you do have a purchase coming up. Maybe it is I don't know, let's say that your youth is involved in sports or athletics or some type of hobby. Maybe we need to find a certain particular type of bat for baseball or a glove. And with the marketplace being so large in many aspects of what we do in our day-to-day lives, we spend a little bit of time and energy into thinking about where can our money go the longest way? Do we know the value? Is this brand known for quality and tend to last longer? And so these are important factors. And it's not so much even if you had the funds, but the idea is to place the importance on that critical thinking aspect when it comes to spending money. So allowing for that independent decision making by providing some guidance, but not making the decision for them can help them recognize when, how, and where to get this financial information. And they'll be able to come to you in a time of maybe of greater need or for assistance with a larger financial decision at hand. And so very important stuff. So I'm just going to take a quick pause here to see if I see any comments or questions come up. Not quite yet, but feel free, please, to throw them in there. Francesca's here moderating that for us, so we won't miss anything there. We'll go ahead and move on to the next slide, please. So saving, this is such an important topic for me to speak about, the importance of saving, setting goals. So let's talk a little bit more about this. So I brought up a little bit earlier that the new phone, right? The concert, the college, naming it makes it real. Absolutely, absolutely. Setting that goal is so important. The idea is that we want to implement a long-term financial habit here. The idea of savings and achieving our ultimate goal down the road. Is really instrumental into how young people socialize finances and ultimately into adulthood. How is it that they then make decisions when they reach young adulthood and even later adulthood? The implications are enormous, and I'll dive a little bit more into that here in a second. Another great idea is to make it visual. So there's certain, as we know, there's different types of learners. We have kinesthetic learners who learn by action, by doing. We have visual learners who like to do it, by seeing something, and auditory learners who take that information by hearing it and putting it into practice. And so for those visual learners, as a lot of the research suggests, when it comes to money, the visual tends to be a great way to see differences in gains and losses, et cetera, et cetera. So using a savings tracker, an app or a jar to see progress is a great way to kind of encourage and see how saving can grow over a period of time. One of the challenges that I often have is when we start talking about interest rates and compound interest, and it's often abstract for these young individuals. And so how can we break that down into ways to make it maybe a more simple concept, and so that we can graduate them to thinking about larger ideas and how this kind of plays into. And so again, the jar is a great way, a savings tracker, and with a lot of technology, there's tons of applications. Our online banking itself has some visual aspects to this tied to it, but find your favorite application. You'd be able to do that as well just through the App Store to help your youth understand that visual representation there. And it's very important to celebrate those milestones, is that reward that we have. So for example, if we do have a savings goal, if it's to reach $400 in 5 months, whatever the case may be, is what are those milestones that you can place to help your youth, achieve that and get that gratification that, hey, this is working, I can get there, and build that motivation when it comes to getting to that savings goal. And there's, a little bit more that I want to talk about the importance of saving. It's not so much the amount, it's the habit in itself. A lot of the research suggests if younger people start saving early on, if it's $1, $5 at any frequency that they can, that habit, can amount to tons of savings and a money's earned in their lifetime. I don't have the statistic right in front of me, but the idea is just that, is that if we can start encouraging our youth to start saving, again, not so much the amounts, but more so the habit in itself, could pay dividends down the road as they navigate into their young adulthood and, adulthood alike. And so, again, these can be seen as financial tasks, and we can tackle problems through these financial tasks, and we can do this in small, manageable steps, and savings is a great way to do just that. So again, we're allowing for that independent decision making while providing some guidance, but also allowing that youth or teenager to make that decision themselves. And so again, improving that executive functioning skills, improving the financial skills and decision making that we could make. Awesome, awesome. Cool. So let's go ahead and see what we have next. Okay. Alrighty, so we have a savings tip, and I know I'm looking over here because I have two screens here, so please bear with me. Open a Youth Smart Savings account and start a weekly savings challenge is a great way. I kind of had touched upon that. And we're calling out our Youth Smart Savings account, which we have right now, which running current promotion. Deposit $50 within the first 50 days of opening, and we'll match with another 50. Happy to tackle more questions about that. But I did see a comment come in or a question in the chat, so I'll address that really quickly. Where do they put the money to save? Traditional savings or other means? That's a great question. So I think the conversation should first start with, all right, let's start a savings goal, and what is it we want to do with this? So if it's something that it's a more of a short term per se, maybe a traditional savings account would work for you. And also keep in mind, the level of understanding that your youth has. So this could be a great introductory to saving if they haven't had any experiences quite just yet as your traditional savings. Let's say they already have a traditional savings and they've already been depositing into this area and they have some understandings. Maybe if we're thinking about higher education or if we're thinking about a longer term goal, maybe then we can talk about different types of investment accounts, 529 accounts, which is a youth educational savings accounts. Different types of accounts that can help prepare for larger purchases. There's even things like money markets, things like that. So that's why it's very important for you to understand where your youth is when it comes to some of these concepts. But I would say a great first place would be with the traditional savings, having them come into the branch, make those deposits, have conversations, socialize positive experiences with your youth when it comes to these monies. So that way they come to you when they need that extra help. They feel safe and secure that they can make conversations and decisions and include you in part of those conversations. So I see, thank you, Francesca, throwing in some resources, some information there. Yes, a great option is the Youth Launch Certificate as well, and it fits perfectly with our theme of our rocket, which is blasting off into our savings. So thank you again, and I thank you so much for that question. It's a wonderful question. If you have a follow-up, please throw it in there. Happy to answer that for you. Next slide, please. Yeah, so we talked a little bit about spending, and now we're going to dive a little bit deeper into budgeting, also spending plans. So about budgeting, knowing what's coming in and what's going out, tracking income and expenses. So this is a tough one for a lot of folks because the reality is that most adults don't actively manage a budgeting or a spending plan. We learned this through some of the body of the research that the Consumer Financial Protection Bureau has issued. And so it's something like 6 out of 10 adults actively budgets. So there's still a good percentage of individuals who are not. But this is a great opportunity if you have or you haven't, no judgment here, but simply calling out the ability that's something you could learn together and tackle together. So the idea is that while you help your child reach money milestones, you yourself can do that too. So a little bit more about that. During adolescence and young adulthood, many individuals start making consequential financial decisions. So for example, young adults may make small and bigger ticket purchases. They may become employed open bank accounts, sign leases, get their first credit cards, grapple with paying for college, all conversations that you will be a part of yourself as well. But these new opportunities to earn, save, spend, borrow money give youth opportunities to hone their financial decision-making skills and continue to develop the habits and attitudes that they have been acquiring in earlier stages. So this again comes from the body of work of what we call financial socialization. How is it that we learn about money matters? And budgeting is a great hands-on practice that you can do with your youth to help them understand this. And the great thing is, again, leveraging technology. There's a ton of tools. I personally, I'm a fan of the old pen and paper. It helps with the different types of learners that we have, right? The visual, the kinesthetic, auditory. It kind of can hit all those three, depending on your approach. But if you're not, if you're more inclined with technology, no worries. That's a-okay too. You have budgeting apps also through online banking. You have spreadsheets such as like Google Docs, excuse me, Microsoft Excel, and also you can incorporate some of these conversations, practicing needs then wants. And so while the idea of budgeting can be quite daunting for any individual, we can start with small manageable steps with simple goals and how we're going to get there. And just a general rule of thumb here, this is a quite common, quite known rule here. Try the 50-30-20 rule, which says 50% needs to go to needs, 30% to wants, and 20% savings. This is a great rule that you can teach and you can work with your youth to help understand as their financial profiles or the responsibilities slash tasks are maybe not as large or big as yours as the parent and your responsibilities as an example. So the 50-30-20 rule, again, 50% on needs, so that things are like, are maybe we need that computer and maybe we need to pay for this or that. 30% on wants, allowing us some ability to enjoy our life, and 20% towards savings and hitting that savings goal. Fantastic. Okay, so that's budgeting there, things that we're all familiar with. We're going to go ahead and continue here. Next slide, please. Awesome. So we do have some another little quick Q&A, get some engagement. What are you, the parent or the teen, saving for right now? So feel free to comment, get a sense of what's on our minds. As we all know, we are all actively have financial goals. We're all working towards something. Let's go ahead and share and see what the folks in the audience today are saving for. And all right. And while we get those comments in, I don't mind sharing a little bit about myself. I'm currently saving to do a couple things. I'm saving for a home, and I'm also saving to pay down some debt for the purchase of a home. And so that's what's currently happening in my life right now. I have some comments coming in. Retirement, yes, yes, I love that. Trying to get out of debt, absolutely. I can resonate with those both. We've had some conversations in the past about investment accounts, retirement accounts, employer-sponsored retirement accounts. So yes, 100%. I love that. All right, let's see if we see anything else here. All right, car registration. Yes, absolutely. So putting yourself front and center, right? Some of us said retirement, some of us said trying to get out of debt, and some more of these what we call periodic expenses such as car registrations. Think about how is it you're tackling that, and think about how your young one would tackle maybe an unexpected expense or periodic expense. How can we use our personal experiences to help shape their decision making in a productive, positive way? So at a teenager's age, children can develop certain skills. I'm going to cover some of those here in a second, but think about, what's the ability to manage money or other resources to reach that goal, and understanding money concepts like long-term savings, taxes, invoices, or bank statements. So for the retirement, it can be quite a complex, topic to think about, but that's where the saving conversations, hey, maybe we need to think about when we're a little bit older. We have to think about what we need to pay for in the event that we get to when we get to that age, right? Or if it is to get out of debt, maybe there was a financial moment or a shock that came in our lives, and now we had to borrow money to help us through that moment, and now we have to get out of this debt, right? So again, connecting yourself as an identifiable, reliable source of information, uh, paired with your financial institution like Premier America Credit Union, can really help foster and build an open sense of confidence, can help see you as a trusted individual. And the reason why I say that, because the body of research of financial socialization says that young people learn to about their preteens, they use their parents to learn all about their money matters. As soon as they entered kind of teenagehood and early adulthood, they start learning from their peers, they start learning from media, and stop relying on their caregiver or parental figures when it comes to financial decision making. So it's really important to keep in mind that any activities that you can do while you have their audience, or I'm sorry, while you have their attentions, to help support their development of financial skills and decision makings is a great thing to do. And here's another quick little tip. So in my world, we call this just-in-time activities. And these just-in-time activities provide teens and young adults with guidance and opportunities to make decisions as they have an interest and are ready to make them. So this comes to having conversations about maybe trying to get out of debt. Maybe you can help me figure out a plan. Or if we're talking about retirement, talk about why is it that maybe you want to think about retirement and what you're actively doing. And so it gives them a better sense in connecting yourself to the concept, but also applying that real world, knowledge, and bringing it all in full circle in that moment. Awesome. Let's go ahead and continue here. Next slide, please. Okay, so talking about money without stress. Oof, that's tough these days. I feel like there's a lot of financial hardships coming around, just tough moments, and it's how do we talk about these kind of things without stress and without stressing out maybe our young ones or individuals at the household, right? So let's talk about some tips here, so keeping it conversational. So parents, you're still the guide here, and but teens are ready to lead. And so again, this is what I meant about a little bit about earlier about allowing that opportunity for the youth to have a little bit of guidance, but make those financial decisions for themselves. For the teens, your thoughts, questions, and voice matter. So feel free to speak up, share what you think, share what you've learned, share what you've heard. In today's social media age, there's hundreds and hundreds of what we call financial influencers. Usually there's a product or service tied behind that influencer, and so some of the information that you find on the internet is fantastic, and some of it may come from a sales perspective. So understanding how you can build that relationship with one another to have productive, stress-free conversations. So keeping always a positive attitude. Let's figure this out together. What would you do in this situation, and what did you learn from this experience? As they kind of navigate some of these decision making without a judgment-free environment, which is kind of tough, right? It's hard for us to maybe remove ourselves emotionally from our childs or teens, especially when it comes to managing money. And this is where I ask the parents to be very mindful about your own personal experiences when it came, and maybe in your own development when it came to managing money, because you may be passing on, like I had mentioned earlier, great, great things, but also maybe not so great things, and things that maybe have things that you have experienced in your life. So and I only say this because understanding how to manage money can take a lifetime of practice. You learning how to plan ahead, wait for things that you want, and finish what they start are important skills to have on the road to financial well-being, which is what we're after here: financial wellness and financial well-being. This holistic approach to understanding, we have emotions, we feel certain things, money makes us feel certain things, but then the execution and the planning when it comes to our money story, how we figure that out together. Awesome. All right, let's go ahead and do next slide, please. Okay, another Q&A question here. Which money topic is the hardest to talk about? So let's go ahead and hear from you folks. If you have any comments, please. I've let me think about this. For me, growing up, the hardest thing that I was talking about was credit. The reason being is as soon as I turned 18, I got a credit card. I was going into college and I got into credit card debt really young and I felt ashamed about it. Um, and I feel like that happens to a lot of folks. And so that was my hardest money topic to talk about. I'm curious to see if anybody feels comfortable sharing. I see here income. Yes, how much money we make. We often compare each other. Hey, I make this much. I have this. I have that. It can be kind of it can come from a sense of maybe anxiety or shame, things of that nature. I see another comment here saying always needs versus wants and paying off credit cards ASAP. Yes, that's very tough. So there's a lot of emotions behind money, right? How we make our decisions making, and if we're in that parental role, you know, trying to do the best for our youth and our children, can sometimes be tough. Especially when we've had our own personal experiences. So I just want to talk about some behaviors to look for. So some ideas, some things that I can kind of give the parents here, tips and behaviors you want to look for is, are they taking steps to reach their goal, whether they achieve it or not? Again, the idea is not so much 100% success, but the idea is that are they taking those steps? And if not, if they are taking those steps and they don't succeed, what can we do to help them get there? Um, Simulate demonstrating behavior, like if it was resisting things that seem to be too good to be true, especially with technology these days. There's a lot of things going on like frauds and scams, things of that nature. So if it's too good to be true, and maybe talking about those experiences is, have I been scammed? Have I fallen to prey to some of these things? That can also be a really tough thing to talk about. A lot of emotions, anger, regrets, shame, you name it. I've had a lot of conversations with people who have, and it's very difficult to sometimes open up to. Mhm. Awesome. Okay, let's go ahead and continue. Next slide, please. Oh, I think we've reached the end of our presentation here, but there's a few things that I still like to talk to you all about. Is just generally where you are today, and just some general, uh, things that I can share with you from my perspective as a financial counselor, is that you are not alone in a lot of these in this journey. There's a lot of parents out there navigating money matters for themselves, and then doing their best that they can to impart whatever the best of their ability to impart that to their children, right? And so know that you're not alone when it comes to these things, and there's a lot of families out there doing great things and struggling and overcoming certain barriers and doing the best they can to help their child reach these money milestones. And so a lot of these youth, a lot of what we're talking about is something that you can absolutely take care of or receive assistance or just have conversations at the credit union. We're happy to host you. We're happy to have you, and maybe have some of these tough conversations in person. I know it's tough. Some limitations for the parents is time, competing priorities, things that you have going on in your personal lives. Maybe you already are stressed and it's tough for you to have that conversation. So I would say for the folks that are attending this evening and watching this, you should definitely pat yourselves on the back. You're taking a great step to maybe explore concepts that maybe you already were familiar with, or concepts that maybe were introduced to you that are relatively new. But just know that we're here to help. So all right, I'll go ahead and just take a quick pause here and see if anybody has any questions. Again, today's conversation was centered about building financial confidence together, but if you have just any general financial questions, happy to take them. Um, we do have some resources. Thank you for pulling this out. Um, we have some parent resources here on the screen that takes you to our beautiful webpage where you can find more of what we said and the things that you can do, activities, you call it. And Francesca or Frankie, also here on the call, and I do a podcast that has launched every Saturday that dives a little bit deeper into some of these concepts and topics that we did today. So we highly recommend for you to check that out at your favorite podcast provider. You'll find them all and also on our YouTube. So these are resources. Why do we do this? Because we feel that we need to do our part to help both parents and youth understand money matters to get you to the where you want to be, by coming to a trusted resource like Premier America Credit Union. Okay, all right. So I did see a question come up here. Frankie, what do we think? Any future webinars about investments, money market accounts?
Yes, we are going to be hosting a webinar in the next couple months about investment basics. So I'll share the link for our webinars and seminars page in the recap email, so you can follow along and see when that will be happening.
Thank you so much, Frankie. And I believe we have we did a tax basics webinar which we really quickly talked about in that webinar about reducing your tax liability. And you can find a little bit about that conversation. We didn't dive deep into the investments and money markets, but you can find a little bit about that in that specific webinar as well, which you can find on our YouTube. Awesome. Well, I'll go ahead and pass it on back to Frankie. Thank you so much. You have all been great. We'll be here. And I hope you all have a good night. So Frankie, take it away.
Awesome. Thank you so much. Thank you all for spending part of your Wednesday with us. We hope you're walking away with some new tools, ideas, and maybe a little more confidence to start those money conversations at home. Thank you to Alfredo for sharing such practical and thoughtful tips today. And thanks to all of you for showing up, asking great questions, and being part of the conversation. And as a quick reminder, we recorded today's webinar, and we'll be sending out an email with the recording link and any of the resources that we mentioned as well. And also wanted to mention again that this month is Youth Month at Premier America Credit Union, and we're celebrating with some in-branch activities for the kids, educational webinars like this one, and a Disneyland ticket giveaway. So if you deposit a total of $50 into a Youth Smart Savings account by the end of the month, you'll be entered to win a family 4-pack of Disneyland tickets. And you can find more details in the official rules for that at premieramerica.com/youth. And if you enjoyed today's session, like I mentioned earlier, we'd love for you to stay connected with us. We host free financial education events all year round on various topics. You can check out upcoming events at premieramerica.com/webinars-seminars. And I'll be sure to include that link in the follow-up email as well. Again, thank you so much for being here. Have a great rest of your week. And don't forget, it's never too early or too late to start building healthy money habits. I know we did have a question just come in the chat. YouTube is under Premier America, and all of our socials are at Premier America.